is right. Greed works.
Hello everyone, and welcome to episode 16 of Let's Play Wall Street Raider. I'm RakeM, your host, and today I have good news. We've got no reason to look at this spreadsheet anymore. We've done all the analysis that we're going to do for the time being, and while I'm going to keep this spreadsheet open so that we can refer to the industry list if we get some more bankruptcies for industries that are down below our what I will call our poverty line. We're all done updating it. We don't have to look at it. This episode, we are merely going to manage our companies and get back to just playing the game. By the end of this episode, my goal is to reach September 30th on our calendar and to go through and touch each one of these companies that we own to make sure that they're properly managed. So I'm going to turn the ticker on and we're going to go to town dealing with all those. We've got nothing to do on our commodities right now. We're positioned exactly where we want to be. Currently I have silver that I have bought. So it's down right now. We're hoping it'll go up now that the interest rate's coming down. Corn, we sold it short at 10 and it was all the way up to 9 and now it's going down, so we hope that continues. Gold we bought at the end of the last episode and we want it to go up. We also bought 500 million ounces, I guess it was 500 million ounces of gold, so it'll be doubly important for gold to go up. We still haven't received any messages regarding the trade war that's going on. Maybe we missed it during all of our transactions, maybe we didn't, I don't know. Hopefully we'll see something of that this episode. And our stock of the bank continues to fall. It went all the way from 130 down to 100 last episode, and we only played a month's worth of game time last episode. So hopefully with the interest rate going down, our bank will rebound, especially with Irish Life and Perm poised to collect some money in the fourth quarter from interest rate swaps, but we probably won't get to the fourth quarter until episode 17. Alright, so without further ado, I have the stock ticker set to 66, so it's going to go at what I would refer to as a normal speed, and we're just going to go down the list. Now, we need to clean this up because we got rid of Kraft, we got rid of Lukoil, and I'm going to ignore I'm going to ignore these earnings reports unless the earnings are off. So if the earnings are going down, I might look at it, but otherwise we're going to ignore these. Alright, so I'm going to clear this, and I'm going to assume that for years to come, we're not going to be selling the bank, we're not going to be selling the insurance companies, so I'm not going to put them over here on the shortcut. Alright, let's take a look at Burger King. We just picked him up last episode. At 0 growth, 6 on the R&D, 0 dividend. And all that looks fine to me. Let's see if he's supposed to make money. No, he's supposed to continue to lose it. He's reasonably competent and it's improving, so why are we losing money? Shouldn't be because of the debt. He's 100% owned. I mean, his debt's a little high. We'd like to have it down around 6. So he shouldn't be losing money. He's got a return of 10%. Alright, let's have Hartford give him $1 billion to pay the debt down some more, and then we'll call it good. Alright, so we'll put it toward the loan since we're not getting, or since the bonds are a lower percentage interest rate. Okay, and actually, need to have, before this interest rate goes down any further, we need to have Hartford invest in more bonds. So we're going to do that real quick too. Alright, just looking for big numbers over here. Anything over 10,000 we're going to buy regardless, as long as the interest rate's above 10.5%. Alright, so now we got 139 billion in that, and government bonds are now trading at 97. We only have 10 billion of that, so let's go ahead and buy some more of those. Probably 200 billion's worth. Let's see. No, we don't have that much, so let's just buy 100 billion. We'll keep the other 60 billion as a reserve, so we can give cash to companies or buy companies if we have to. Alright, that's it. And these should go up in value too, so. Alright, let's look at Swiss, see if he has any cash that he wants to invest in bonds. Doesn't look like it. Alright, but I've got a significant amount of money all of a sudden because corn has gone down. So I can buy some bonds and give them to Swiss. So let's do that. Alright, now let's contribute all these to Swiss. Okay, Swiss already has 15, so I guess we'll just hang on to those ourselves. Alright, so, wow, look at corn. Went all the way down to $6.95. Cool. Keep going, baby. I like it. And silver's up, so that's good too. Alright, Browning Ferris. We'll look at him in short order when we get down to him on the list. Alright, let's clear this again. And like I said, let's assume that we're not going to sell the bank or the insurance companies, so we don't need to put them on the short list. And we'll look at you in a bit. Alright, so let's go to our general menu, largest market cap. And we'll start with the biggest one that's not the bank or in the insurance company. So oil refining. And I'm just going to go down the list here and get them all in. Alright, so I'll be right back. Alright, now that that's done, I want to go through and start with the bank and make sure that we have the R&D set correctly. Alright, so we are reasonably competent, and we've been that way for a while now. We've got it at 6%. I'm going to up it to 7, get us to very capable, and then set it back down. Okay. Hartford Insurance. Where is it? Mediocre. Okay, that's not good. And we're at 4%, so let's up it to 6. Alright, now Swiss Reinsurance. Reasonably competent. And 7%, or actually we need to change that to -1 and up the R&D to 6. So we don't need insurance reserves. Alright, Matsushita, what industry is he in? He's a holding company. Consolidated papers. Let's see if we want that. He's 2.3% of the industry. And he's reasonably priced, so we can take that off of Matsushita's hands and liquidate it. Alright, so we'll have Hartford buy Consolidated Papers. Now let's contribute it to Union Camp. Okay, and now we will liquidate it. And debt-wise, we're fine, 3-1, a little bit over. 9.5% bonds, and we're borrowing at 11.5%, so let's put this $500 million toward our loan. Okay. While we're here, let's take a look and see if we need to change anything. 6% seems to be okay. 1% is fine. We're very capable. Alright, Alright, so this one we can set a dividend because he's making money. So we'll set it to 25 cents. Okay. Alright, let's go back to the bank. And deal with this parent company, the holding company that gave them to us, Matsushita. Alright, he now has no assets except cash. His share price is really high, so we could just sell him. He didn't have any money really to bother us with, so let's just sell him off. Okay. Let's see what else the bank has that we need to deal with. Toyota and Nissan. And we were waiting on Nissan to go broke so that Mazda could pick him up. And Mazda has a lot of cash. So we'll buy Nissan from the bank. And then liquidate Nissan. Alright, and now let's pay down our loan. Alright, so now we have 12%. And we don't need to grow at this huge rate anymore. Let's back that off to 10%. Let's reduce our R&D. Are we capable? Alright, so what we want to do is we want to reduce our R&D down to 6%. That'll raise our return to 22. And let's make our growth rate 7% or 1/3 of that, and then up our dividend to 1% of our net worth. So 6, 7, and whatever the rate is for the dividend for 1%. Alright, and 1% would be 72 cents a share. Alright. That's good. Alright, let's go to the bank again. I think I had one more. Toyota. Alright, Toyota. We want to merge with VW. Okay. And these returns are finally getting up high enough to where we don't have to grow negative anymore. Alright, so let's see how big he is. He's $2.5 billion. And we can afford to buy that. So let's buy it from the bank. Liquidate Toyota. Now let's see what we need to do. Got a 2-to-1 here. So we'll want to bring this down to 7.5. So $2 billion. Alright, 6%, that's fine. And are we making money? We are. We're reasonably competent, so let's make our growth rate 1% and our dividend 1% also. Okay, and 1% would be 45 cents. Okay. Is that it? That's it. Alright, now we're going to go down the list. We haven't looked at Swiss for their credit bank went bust. I don't remember if that's one of the ones that we had bonds in or not. Not that it matters because it's too late anyway, but wrong button. I don't remember if we finished what we were doing with Swiss. Reasonably competent. 6 and -1. Okay, so we were done there. Alright, so now we're going to just start over here, work our way down, and then we'll go through the rest of the My Corporations list. Alright, so STI had an earnings report. This is what it makes without interest rate swaps. We expected there to be a drop. Hopefully next quarter, when those interest rate swaps begin, so not next quarter but in January, we'll start to have an increase with this. Alright, so that's good. Over here. So Arabian. Oh, okay, merger. Caterpillar is offering to acquire all the stock of Mitsubishi at a 31% premium. And they are 71% larger than MHI, so not quite double. He trades at less than his share price. So if we did the merger, and I just want to look at MHI, see what his stock price was trading at. Okay, so it was really low. I don't know if it's still really low. So we'd be giving up some equity, I think, if we did this. So let's hit no. Okay. Alright, Arabian. With the oil price high and staying high, hopefully for a while, we can make a lot of money if we continue to grow here. This has gone up from 7% all the way up to 11%, so we can raise our growth rate again to like 20 or even 22. We need to change our R&D to 5 or 6 so that we can stay ahead of the curve on those. We just got this, and we're about to declare our earnings, so alright, so let's change our growth rate to 22. And let's change our R&D to 6. And I think we don't have a dividend right now, so let's look and see what we would like to change to. 23 cents. We're making way more than that now, so let's do that. Small price to pay for a higher stock price. And we declare in 10 days, so I'll be interested to see what it is, not this time, but in September or October, the next time we declare. Still got a lot of cash. I guess we can pay our loan down too. Yeah, let's do that. That'll help it go up too. Alright, next up, Litton. Haven't looked at him in a while. Alright, he's growing at 15%, and the industry is hardly growing at all. 16% on our R&D. Our stock price is up. Let's see if it's time to sell him. Alright, here we are, 114. Litton right here. Alright, he was at 321. And our target price was 114, and he's at 104. So we're almost there. Just a little bit to go. Alright, so let's see what we need to do here. Let's change the dividend to 24 cents. Lower our R&D to 12. And pay off our loan. Ordinarily, I would lower the growth also because of this, lowering, the demand lowering. But if I do that, his stock price will take a dip. And look at that, he's up to 500% now already. 120. So we're ready to sell him. Okay, made 339%. Alright, now let's look and see if we can re-enter the industry. Okay. Looks like that's the only one. This one's reasonably priced, but he's owned. Same with this one. Let's see what percentage they're owned. Okay, 100% on that. % on that. So I guess just this one. And that's fine, though it's going to take a while to grow him up, but Goodrich. Okay. And I'm going to give him $5 billion and set his growth rate to an outrageous amount. Okay. 5 and -8, we don't need to grow negative. He's grossly incompetent. So let's set our R&D. Look at that. The autopilot already knocked his R&D down. Alright, so let's set ours to 10%. Matter of fact, let's make it 15. Let's make it 15. This will put us negative, but we've got plenty of room and we can give him more cash if we need to. And we'll set his growth rate to, let's see, let's set it to 10. And as soon as the management's performed, I'll knock it up to 30. And dividend 0, okay. Alright, so that's all we need to do there. Alright, Nissan America did well. We'll look at him in a minute. Right now we need to get rid of Litton off this list. And put something else on it. So I want to go to Swiss and see what we have on his portfolio list. That is large and is not already on here. So Dow's on there. Warner Brothers is not. So let's put him on there unless there's a bigger one. Nope. Okay. Alright, let's go to America Online. And this is one of the ones that it has growing at an outrageous rate. And all these guys are just going huge, like there's no tomorrow. Now, don't need to freeze him or him because they're going to have to slow down pretty quickly. But Alibaba, he has plenty of room. So does AOL, which is us, and Bazaar, eBazaar. He's got room. He's got room. Boy, it's pretty much all of them except a couple. All right, let's freeze everybody, and that way we're the only ones expanding at this rate. Let's see how much cash we've got. None, but very little loan. Almost all of our value is in Time Warner for this stock. It's time to start closing the gap. Put some more assets in that portfolio there. Alright, so let's go to the bank. Well, actually, first we need to take a picture. Okay, now let's go to the bank. Freeze, unfreeze, and let's go down the list. Alright, now that all those are frozen, let's look at our settings. 38 we can keep, 14% on the R&D. Let's see, we're very capable, so we could back it down. Of course, we might slip into reasonably competent if we back it down, but let's make it 12. Okay, and we're making money. And we're going to be reinvesting a lot, but I want to use that dividend to try to drive our stock price up. So let's make it 28 cents. Okay. Oh, that's one of the ones I own. No, I don't want a dividend on that. I'm an idiot. Okay, so let's eliminate that dividend and the one on Arab also. Well, you try to get into a hurry and be formulaic about things and you forget exactly who gets what. Alright, let's try this again. Okay, so AOL will not have a dividend. That's fine. Alright, next up is Microsoft. And I own him as well, so we won't do a dividend on him. 55%. And the industry's growing at 3, so we're going to need to do some freezing here too. We don't need 21%. I think we're capable. Yeah. We can back that down to 15. That'll give us an extra 6% here, and we'll set our growth rate. Since we're at 23% of the market now, let's just make it 4 times this, which would be 12. Is that what I want to do? No, let's make it 20. Alright, so 16, 20, and 0, and then we need to freeze everybody. Alright. Alright, so we got to remember at the end to get Ceridian. Okay, let's go to the bank. And I'm going to fast forward while I freeze all these. Okay, we froze them all except for Novell, and that's because we don't have their loan. I'm just going to look and see where they are. Novell right there. So they're pretty small, 0.3% of the industry. They have no loan, which is why we don't own them. So that's the best we can do. Alright, and we'll see what happens with the stock price. What did we get up to over here? We've been up to 45 and we've slipped back to 29. So hopefully that'll go up. We need to get like 66 cents a share minimum. Actually more than that. We need to get 68 cents a share minimum. So let's see how that does. Hopefully freezing all those loans will help our returns. Okay, so next up, oh, here's Arabian. Okay, so we got $1.43, and the question is, what will it be next quarter? $1.60. All right, keep climbing. Keep climbing. Let's apply that $12 billion towards our debt. Okay. Alright, still looks good. Alright, so next up, Time Warner. 114 and 0.3. Now Time Warner is a subsidiary of AOL, so a dividend is fine. Growing at 7% for the industry, so we need to up our growth rate. Let's make it 11%. And are we capable? We are, so we can back off on our R&D. Let's make our R&D 20%. 12. What did we say on the growth rate? 11? Let's make it 12 too. Alright, now dividend. Currently at 8 cents, which is what our net worth is. Let's pay down our loan. Oop. Alright. We just got done making 37 cents and we're projected for another 37, which is up. So that is good enough. Alright. Next is Nippon. Okay, and I own him, so we don't want a dividend. $1.89, reasonably competent. Got a little bit of a loan, but not much. Okay. Alright, we're growing pretty fast, but as long as the industry is improving, I'll leave it that high. So let's take a look. And it is. Alright, so let's just pay down our loan a little bit. Okay, 0.19, and we're reasonably competent. So let's bump our R&D up 1% and see if that helps. Okay. Alright, next up, Costco. Alright, here we got 20% of the market. Who owns him? Me. Okay. He's got some cash to pay down. Alright, we're at $1.45. We earned $1.30. All that looks good. Alright, so he's grown at 18%. That's a problem because he's driving down everybody's earnings. So let's freeze him. We'll grow at 10%. And make our R&D 12. Okay, so 10, 12, and freeze target. Okay. Okay, nothing else to do here. Oh, except to pay back the loan. Okay, so we're deteriorating now, but hopefully when Target loses its credit, it'll reduce its growth rate and that'll make it improving. So we'll have to check on that in a quarter from now. Alright, Siemens, let's see what that situation's like. 1, 5, it's the same. Everybody else is growing negative. And we may have to buy a subsidiary and donate some of our assets to it so that we don't become a 50% market share. But we've got a little bit of time before we have to take that drastic measure. Although we kind of need it, if we get a stock that's poorly priced, might be better to do it now. Let's see. Show me a company that is worth between 5 and 100 and the stock price is 95%. Enzo. Isn't that one we just got? Yep. So we could have Enzo sell off its assets and enter the electrical equipment industry. Alright, Siemens buy stock of Enzo. Yes, 100%. Okay, Enzo will sell corporate assets. Okay. Alright, now Siemens will contribute business assets to Enzo. And let's contribute, let's see what percentage. He's 46% now. And let's take ourselves down to 40. So 12 billion. Okay. And let's split this guy. And now, what do we want for settings? %5 is fine. 1% on the growth. And if he's earning anything, we'll do a dividend later. Okay, so growth 1%. And now the point of this is, if these guys go broke and their assets get lost, we can just simply sell. Siemens can sell Enzo and take less of a loss and not be exposed to antitrust suits. And by setting Enzo up now, we have the opportunity for Enzo to turn a profit and hopefully run up his stock share before Siemens has to sell him, so that Siemens may not have to take a loss at all. He can just sell Enzo for a profit and have a smaller portion of the market. Of course, there's always the third option, and that is that GE doesn't go broke and we have Enzo make a profit, and we eventually either merge them, or we sell Enzo off, or we sell Siemens off and we keep Enzo. You know, there's just more options, and we're prepared for any scenario at this point. So, all right, let's move on. Let's go to ST Microelectronics and take a look at what's going on in the semiconductor industry. And it looks like we may have too big of market share here as well. 48.8. Wrong button. Alright, so everybody's growing negative and the industry is positive, and we have a major market share, and again we have too much of a market share so that we can't grow. Our profits are going to go up, but if we can't grow, we can't we can't grow our stock price. So I think what we'll do is, the next small company that goes broke, we'll do the same thing here that we did with Siemens, and sell off some of the, or contribute some of the assets. Alright, but as far as what we got now, let's see, -10 we want to keep. We're at 1% on R&D, which is awful low. We're somewhat mediocre, so we need to raise that. And actually, we were looking at the wrong one. We're reasonably competent. Alright, and income is going way up thanks to the demand growing. So let's set this R&D to 7%. And we'll leave the rest alone and see if we can pay down some of our debt. And we can, so let's do that. Okay, R&D 7%. And I think that's all we need to do on this one. As soon as a company goes bankrupt that we can take over, that doesn't cost a lot, we'll transfer some assets to it and see if we can turn up the growth rate and have his stock price go up as a result. All right, Hormel. Okay, don't like the way this is looking at all. The top 3 companies with the biggest market shares all have good credit situation, and yet the returns are not that great. Of course, we're spending 13% on R&D. Why is that? Because we're mediocre? We don't have to set it quite that high. We can make it 9% and get the same effect pretty much. So let's lower that. And we have no cash to pay down our loan. And we have a dividend, but that's because he belongs to Swiss and we're making money. So we'll leave the dividend. It's currently at 28 cents, which is just shy of our net worth, so we'll just leave it. Alright, next up, Dow. Belongs to Swiss. Very capable. Growing at 1%, while the industry is -2, and pretty much all these guys are growing super negative. So we're very capable, so we can grow some more actually with them going down. All right, let's pay off our debt. And let's grow some more. Let's grow at a rate of 6%. And we need to have a dividend of 28. Alright, so growth 6%. Dividend 28 cents. Okay. Let's see how that does. Alright, next up, Lenovo. Lenovo is not the market leader. Growing at 1%, everyone else is negative. No dividend. We're reasonably competent. Alright. We need to up our growth rate to at least 8%. Probably make it 10%. Since we have no debt and some cash on hand, let's even make it 12. Dividend at 21, and we'll leave the R&D at 8. We are making money. Okay. Next up, Goldman Sachs. 10% of the market. We're growing negative and we don't need to. And we're reasonably competent. We're making money, but not a lot. Alright, let's pay down our debt a little bit. And let's look and see if we want to change any of these. Let's bring our R&D down to 8%. And let's just grow at 1%. And we'll leave it there for now. So 1 and 8. No dividend because I own it. Okay. Next up, Verizon. Verizon is still negative. Mediocre. 9% of the market. And we have too much debt. Let's look and see why that is. We're growing negative. Could just be because, I mean, these returns are not that great. 10%. So our debt's too high and we just don't have a good enough return. These guys do. They must be very capable. So let's increase our R&D. Leave the growth rate alone. Leave the dividend 0. And let's make our R&D 11. Now let's just have SunTrust give him some cash. So we need to have this down to 25 billion. So he needs 10. All right. That'll help. All right. Next, Alcoa. All right, Alcoa's earnings are going up. He's got a major market share. Reasonably competent. We've got some money we can pay down our loan. Now let's look at our settings. Growing negative because we have too big a market share. And we could buy PCU and give him some of our assets, probably 10% of our assets. Run him up and then sell him off. Let's see how expensive that would be. Okay, so he's only 500 million and nobody owns him. So let's do that. Okay, now we'll contribute assets to him. First we need to decide how much though. We've got 40,000, so let's give him 4,400. Okay. Could give him a little bit more so that we're down to 40. Let's give him another 10% of this. Let's give him 3,500. Okay, that should be enough. All right, now he is going to turn a profit. He's reasonably competent. Doesn't have much in the way of a loan. Everything looks good. We can just leave him the way he is. Of course, we might want to increase the dividend to 86 cents, or 84 cents, excuse me. Alright, one last look. Yep, all that's good. Okay. Warner Brothers. Oop. Alright, earnings have gone up and are flattening out. Reasonably competent, improving. Last quarter he didn't have to borrow money, but he didn't have much of an excess either. So with the interest rate going down, he should be improving. Okay, the 3Com antitrust is coming up. The settlement's been rejected, so now we're going to trial. And we lost. Okay. Alright. Warner Brothers is owned by Swiss Re Insurance, so we can have a dividend on this one. As long as he's making money. And he is. So 15% looks good. And looks like we need to up our R&D to 9. Alright, so our dividend should be 52 cents. Alright, here's Warner Brothers. Alright, that looks good. We could add Fox to our portfolio. Let's see, do we want to do that? He's got an A credit rating and a decent return. He's just mediocre, that's all, but we can turn that around. That would give us 20%, which would increase our return. Let's do that. Let's see how much he is. 17, so it would be just over 20 billion. Alright, well, I have enough cash for that, and Swiss Re Insurance doesn't. My cash seems awful high for only this much of a return on... Oh, I sold something, right? Yeah. Okay, doing too much at once. Alright, let's buy Fox. Okay, Dow's up again. He needs no money. That's 3-1. Okay, so we'll just contribute him to Swiss. Okay, and then have Swiss contribute them to Warner Brothers. Okay, and now we'll just liquidate them. Okay, Warner Brothers has no futures, and we got to terminate some swaps. There should have only been one of those. How did we get swaps with ourselves? Let's look at this for a second. Yeah, like that's Alcoa. I didn't want Irish, I wanted Alcoa. Alright, we got to go through the list and make sure that we don't have any interest rate swaps between Irish Life and Perm and any of our other companies. So I'm going to fast forward while I do that, and I'll be right back. Alright, so we got rid of all the interest rate swaps with our different companies. I've never had that happen to me before. Of course, this is also the first time that I didn't get all the way up to 950. So I guess when it runs out of companies to do swaps with that aren't yours, that it will go ahead and do swaps with companies you do own. But that's just a guess. I don't really know. That's the only thing I can think of as to why it would do it. But it hasn't escaped my attention that all of our commodities are going in the right direction. We've got almost $1 trillion in cash, and our total net worth is up as well. So the bank must have had a surge in its stock price. And British American Tobacco is down, but that's because we just merged it with Reynolds, who just declared bankruptcy, so I'm not going to be concerned about this right now. Alright, so Warner Lambert, did we merge him with somebody too? Oh, 966. Wow, that's fantastic. Let's take a look at that. Holy cow, 966. That's awesome. Keep going. We're growing kind of low. With everybody else negative. Got a decent return. Alright, so Warner Lambert had a great quarter, $11.30, and it's going up again next quarter. So, let's see. Actually, we are 966, sorry. And but it's still going up next quarter to 1156. I mean, that's just fantastic. So, let's see what his stock price is. Still haven't realized its full potential. I'm going to go ahead and split it. Get it down under 100. Alright, so let's see if there's anything we need to change. These guys are both negative, and the industry is growing, and we've got a great return. So we can increase our growth rate. We don't need to mess with our R&D, I don't think. We could buy who is it? Kimberly Clark? Okay, Kimberly Clark. I thought they were in the paper industry, but maybe that's another division. But these guys are mediocre and they're losing money, so I guess we'll just stick with what we got. So let's increase our growth rate. Industry is improving, so we want to come all the way up to the point where it's deteriorating but not cross that line. So because we're a smaller part of the industry, we can probably put it up as high as 35%. And we've got plenty of room on our credit line to do that. So let's start at 35 and see what happens to the supply-demand situation. All right. And it's still improving. So we'll go with that. And we'll up it some more if the earnings report for next quarter is up and the projection for the following quarter is still up, and we're still improving as far as the supply and demand. We'll increase it again next quarter. We're earning a lot, and we could stand to have a dividend here. So let's give them a dividend of 45. Operating under the assumption that will give us a stock price boost. Okay. Because 45 cents. That's a small portion of what we're making every quarter, so we can afford that. All right, we've been going for over an hour now, and as much as I would like to just keep playing and get to September 30th, we're just not going to make it. Not if we're going to keep these episodes to an hour. So we're going to end the episode here. Our commodities we'll revisit in the beginning of the next episode. I suspect, and I just want to check and see what the stock price is on the bank now. See, the bank's way up again. 167. Of course, we got a long way to go to get back to our peak. But, that's way better than 98 or whatever it was earlier. So we're back up into the 42 trillion range. And hopefully that'll continue. All right, so thanks for watching the episode, and hope you enjoyed it. Please like and share. Until next time, have a good one.